Thanks, JEC. Hello, everyone. Welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. And before I get started, I need to go through the disclosures. General disclosure. All Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. And I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And on-topic questions or comments are welcome, and I'll be watching the Discord chat, Options-Doug chat channel in Discord, and the chat in YouTube for your questions and comments. So hello JEC, hello Rob, glad you're here. Thanks for confirming the audio. And Rob says the audio is good in YouTube as well. So I think we're good to go here. Again, I'm looking for your questions and comments. All right, let's get started. So what I want to cover today is, first of all, news, events, and economic data coming out this week. And then we'll go through our positional analysis. And then finally, we'll talk about some setups. So if this wasn't going to be an interesting week enough with the CPI and PPI data coming out and options expiration on Friday, a crisis with, well, I don't know when to use the word crisis really, but a situation with regional banks kind of came to the forefront at the end of last week, Thursday and Friday. And that appeared to be kind of the primary driver for the drops in the S&P 500 the last couple of days last week. So that is still ongoing. The regulators have stepped in over the weekend, and there's plenty of coverage on the news. So that's all I'll say about that. So it just complicates the week even further. So the rest of the week, again, I mentioned the CPI data coming out, and that's tomorrow, and that's been a very important data point. So CPI will be reported tomorrow at 8:30 a.m. Eastern Time. So that's tomorrow. Then on Wednesday, the PPI data comes out, again at 8:30 a.m. Eastern Time. And then on Thursday, there's jobless claims, and also this this daily AFX is indicating the building permits might be high importance. I'm not sure about that. And then finally on Friday, Michigan consumer sentiment at 10 a.m. And of course, Friday is the monthly options expiration, and March is a big one that The quarters are typically large expirations. And recall for the SPX, there are two settlements during the day: the AM settlement for the standard monthly contracts, and then the afternoon settlement, the PM settlement for the weeklies. And then all other options expire at the end of the day, the monthly options. Okay, so that is the news, and then just a quick reminder: the FOMC meeting is next week, so that will be next Wednesday. And one thing that I want to point out, it's worth taking a look at here, is the CME Fed Watch tool, and this is really interesting. The last time that we looked at this, I can't remember it, it must have been a couple weeks ago, there was about a 70% chance of a 50 basis point hike, and that has shifted dramatically. So the current target rate is 450 to 475. So now this is not showing any chance of a 50 basis point hike, and it's showing a 64% chance of a 25 basis point hike and almost a 36% chance of no hike at all, given the recent events. So this is pretty interesting, and this may very well change tomorrow with the CPI data coming out. So just something to keep in mind. All right, let's take a look now. Let's start our positional analysis. Let's take a look at some charts. So the first thing to take a look at is this Bookmap chart. This is the ES futures. And note that this is rollover week. So I have rolled over to the June contract, the M contract. And there's been a substantial shift in the difference between ES and SPX, those levels. It was about 1 point last Friday for the March contract, and last I calculated it, it was about 32 points. So that complicates this chart somewhat. And recall from I've shown many times how important the SPX levels are on the chart. So before I dig into this any further, I want to go take a look at a larger time frame where we're just focused on SPX and the Spotgamma levels. So again, this is just showing SPX and the key Spotgamma levels. These are updated daily in a thinkorswim think script that you have to update manually. It just takes a couple of minutes. So the key levels here, first of all, there's the put wall. Now it has moved down to 3,800 from 3,900 yesterday. And then the key gamma strike and the volatility trigger remains at 4,000. And just a brief note about the volatility trigger, that is Spotgamma's gamma flip level. And this means that below that level, market makers' position on the gamma curve is negative. And we'll see in a minute when we look at the data that it is quite negative, extremely negative. And this indicates that market makers, traders are long puts, market makers are short puts, and they have to sell futures to hedge their delta exposure as price drops. And as price rises and implied volatility drops, they can buy back their short hedges. So with the gamma, this negative, that's certainly an important dynamic to keep in mind. And then the call wall remains up, way up here at 4,200, definitely out of play. All right, so that is a 20-day, 1-hour chart. And now let's take a look at a shorter time frame, still with a thinkorswim chart, just focusing on price and levels for SPX. And this is showing this 3850 level, which was noted as support in the Spotgamma AM Founders Note, and then this 3900 level, which was noted as resistance. So those levels have definitely been in play today. All right, now let's take a look at Bookmap. And again, remember, I'm looking at the June contract now. And for anyone new to Bookmap, just a quick note, if you have already had the H contract up, the way to roll over in Bookmap is just to subscribe to the new contract, the M contract. Then you can come down to your chart, click chart settings, and inherit chart settings from, and I've already unsubscribed from the H contract, but you can just inherit all your settings from the H contract. So it's really just a simple two-step process to subscribe to the new contract and then inherit the chart settings from the old contract. And also note that the Spotgamma levels are no longer working for the March contract. So speaking of Spotgamma levels, I've got two columns of notes here, and this is the Spotgamma cloud notes, and these are provided to Spotgamma subscribers and cloud notes. They're updated automatically. So this is showing the SPX 3850 level, and Spotgamma is using a 40-point difference here between ES and SPX. And again, I calculated about a 32-point difference, and I'm showing that in my cloud notes here. So here is the 3900 level, SPX 3900 resistance, 3850 support. I'm also showing the ES round numbers. And then finally up here I'm showing the SPY key gamma levels, put wall, call wall, key gamma strike, volatility trigger. And I had to calculate with the new ES contract, I had to calculate the ratio again. And just for anybody who might be interested, I calculated 10.09 is the ratio between ES and SPY. All right, so those are the levels that are in play for ES. And you can see that also the ES 3850 has been in play today. And JEC noted in another post that this double bottom here was a good entry point. And you can see the shift in order flow just after the cash open. Positive or rising cumulative volume delta. Let me just get that out of the way. Rising cumulative volume delta, that's the pink line, and then buy stop orders, and that is the yellow line, rising yellow line, and both continue to rise. And then right around 11 a.m. some buy iceberg orders came in. And that's shown with this rising light blue line showing the buy iceberg orders. And not a lot of volume there in the buy iceberg orders. Not a lot of, I guess, not a lot of commitment by larger traders. And just to, for those of you who may not know, iceberg orders are a CME order type for rhythmic for futures, CME futures, provided by Rhythmic Data, and this is what larger traders use to hide their size. Okay, so that is that's the ES futures, and those are the charts, the levels in play, and let's talk about shifts in levels, and there were a few. First of all, the volatility trigger for SPY dropped down slightly from 402 to 400, and then much more significantly, the put walls for SPX and SPY both dropped. So the put wall for SPX dropped from 3,900 last week to 3,800 today, and then SPY dropped from 390 to 380. And then very strangely, the SPY call wall jumped from, I think it was 397. Yeah, 397 last Friday to 430. So it's not even shown on the gamma levels charts. That may come back closer in line tomorrow. But anyway, so the call wall is not in play regardless. All right, so those are the levels, the shifts in levels. Again, the most significant is the shifts lower in the put walls for 3,800 and 380. And William C. asked, who's the larger trader? And I don't know. Some large hedge fund institution. I don't think it's the Fed. I don't think the Fed is here trading futures. So market makers, I don't think use iceberg orders. I think they're just in there buying and selling. They don't care about price. They don't care about hiding their size. They're just hedging their delta exposure. Okay, so those are the again, the levels, the shifts in levels significantly is the put wall lower. Now let's take a look at the gamma levels and see where these charts come from, or these levels come from. So these are the absolute gamma levels. First of all, we'll look at SPX. And this is from Spotgamma showing the absolute gamma levels for SPX. This is the 0 line. And above the line, that is positive gamma or call gamma, shown with the black bars. And below that line, that's negative gamma or put gamma, shown with the teal bars. And this is the 4,000 level. That remains the key gamma strike or the absolute gamma strike. That's the strike with the largest absolute gamma, and that can act as support, resistance, or a magnet. And then here's the 3,800 put wall, again shifted down from 3,900 to 3,800. That's the strike with the largest net negative gamma. And that can be expected to act as support, and that behavior may differ a little bit between the indices and single stocks, and I would say that statement that it can be expected to act as support generally holds more true, is more reliable for an index, SPX and SPY, rather than single stocks. So 3,800 is the put wall, again the strike with the largest net negative gamma, and then 4,200, the call wall, is not even shown on this chart. 4,100 is the highest level. And note the dominance of put gamma down below the 4,000 level. Now there's some call gamma, but the dominance is put gamma. All right, let's take a look at SPY. And SPY 390 is the key gamma strike or the absolute gamma strike. And then 380 is the put wall. and then again the 430 call wall. That's the strike with the largest net positive gamma that can be expected to act as resistance. That's not even shown on this chart. So there's the put wall, the key gamma strike, and note that again the dominance of put gamma below the 400 level. And then while we're on this page, let's take a look at the combo levels. And this is the S&P 500 combo strikes. This is combining SPX and SPY into one number, and in this case it's converted to an equivalent SPX number. And notice here right around the 4,000, all the put gamma below that level, and that is the 4,000 is the volatility trigger. Again, that's the Spotgamma's proprietary gamma flip level with negative gamma below. And let's take a look at these numbers in terms of SPY. And here's the 400 level, and again note all the put gamma below that level, and 400 is the volatility trigger for SPY. And let's take a quick look at NASDAQ. And for NASDAQ, we'll look at QQQ. And for QQQ, 290 is the key gamma strike. And there were no shifts in levels for QQQ today. 285 is the put wall, and 310 is the call wall. And again, there's the dominance of put gamma below the 300 level. Okay, so those are the gamma levels for the S&P 500 and NASDAQ. Now let's take a look at some data. And this is very interesting. This is something that I look at every day. This is gamma notional. And this is indicating market makers' position on the gamma curve for SPX in the left column, SPY in the middle column, and QQQ in the far right column. And all of these numbers are extremely negative. And what this means is this is market makers' position on the gamma curve. And in a negative gamma environment, this means that, and we just saw that traders are long puts, market makers are short puts, and as price decreases, they have to sell futures to hedge their delta exposure. So for SPX and SPY, market makers are selling ES futures. And these numbers dropped from last week. So last week, gamma notional for SPX was minus 932, and it is shifted to more negative today at minus 1083. And SPY gamma notional on Friday was minus 2809, and it has shifted to minus 3000 today. And then for QQQ, gamma notional was minus 752 on Friday, and now it is minus 916. So this can work in a couple of ways, and I talked about this last Friday, the negative gamma Vanna feedback loop, where if price is dropping and implied volatility increases, market makers will have to continue to sell futures to hedge their delta exposure as price drops, and that can create a feedback loop. And so that's one way this could work. And then the other way around is a put Vanna rally, and that can certainly happen with, and certainly something to look for with gamma notional this large, this negative. If price starts to move higher, let's say the CPI report comes out tomorrow better than expected, keeping in mind that traders have paid very high prices for puts, and most likely they're buying either puts that expire Friday or either 0 DTE puts. And whatever the case, those puts that traders have bought, and they're probably puts that expire Friday, short-term puts. As price rises, those puts will very quickly lose value due to increase in price, a drop in implied volatility. That's the Vanna effect, and that can we've seen that in the past in CPI reports, that fuel can spark a pretty powerful rally. Now, of course, complicating that is the regional bank issue. So just something to keep in mind, something to look for. Okay. Finally, let's take a look at the Vanna charts. And this is a graphical illustration of what I was just talking about. This is the SPX Vanna model. And one other thing that we'll see on this chart is the charm effect. So what this is showing is market makers' delta notional. That's shown on the vertical axis. Their delta exposure will increase as price decreases in a negative gamma environment, and the price is shown on the horizontal axis. And then this green curve is showing the current expiration. So for SPX, that would be today, and that this is all showing how market makers' delta notional changes with changes in price and changes in implied volatility. That's shown by the green curve, and that's the Vanna effect, the change in delta with a change in implied volatility. And again, this works both ways. I was just talking about the negative gamma Vanna feedback loop going down, or a put Vanna rally going up. And this black line is showing next expiration. It will typically that's going to be for the Friday expiration, and that is showing how market makers' delta notional changes as time passes. And the reason that's important this week, this is the big expiration week. There are most likely going to be a lot of puts that traders paid a lot for that are going to expire this week, and just due to the effects of time, they will start to lose money they will start to lose value very quickly, and that's the charm effect, the change in delta as time passes. So both the Vanna and charm effect will be in play this week. All right, so that is SPX. Here's SPY, showing the same thing, just a steeper curve, indicating that, again, gamma notional for SPY was about 3 times the size of SPX. And then there's QQQ. And then finally, let's take a look at this is my key gamma strike list for all the stocks on my watch list, and I track this every day, and I note the key gamma strike for the previous day, and I compare that with the current day. So this is from today in the D column, and the E column is showing the current the key gamma strike from the previous day, and then I color code these red or green, indicating whether it dropped or increased from the previous day. So here in the case of AMD and Meta, the key gamma strike dropped from the previous day, and I color code that red. And this is just a quick visual reference that really indicates to me that I need to investigate further. So I would go into Equity Hub and look at these stocks and see if there were any shifts in any of the other levels. All right, let's take a look at some setups now. And again, let's start looking at Hero here, and I'm going to look at SPX plus SPY, and this is showing the combined signal for SPX and SPY. And for those of you who may not be familiar with Hero, Hero stands for Hedging Impact of Real-Time Options, and it is showing options trades and market maker hedging activity around those options trades. And a rising Hero line, that the price is in white, Hero is in purple, and rising Hero line means positive delta trades. Traders are selling puts and or buying calls. That's indicated by a rising line. And a falling line, those are negative delta trades, indicating that market maker or traders are selling calls and or buying puts. And I use this signal if I'm trading any form of the S&P 500, whether it's futures, ES futures, SPY share, SPY options, or SPX options. This is the signal that I use, this combined signal. And to be honest here, I did not find much help in this chart. It's almost showing a mirror image of price up until about 1 o'clock. So given the rollover and what I saw here, I decided to focus on just stocks today. All right, so let's take a look at some stocks now, and there were some, I thought, much more clear signals. And let's start with Apple. Zoom in on the morning, and there was definitely a strong correlation between Apple, calls, traders buying calls in Apple, and price action. So let's go take a look at Bookmap now. Excuse me. So here's Apple. I thought this was a much easier read, and many of these stocks much easier read than the S&P 500 today. Nice uptrend in the morning, confirmed by call buyers. And if you're trading stocks and you want to looking for long, that's certainly what you want to look at. As traders buy calls, market makers are selling the calls, and they have to buy stock to hedge their delta exposure. And again, remember, traders are buying calls, and there were a couple of nice setups here. This pullback to VWAP, the first setup, after price jumps up above the 140 hedge wall, and first target at the 150 key gamma strike, and the liquidity there. Then a pullback not quite to VWAP, and then the target above at the 153 liquidity there. So nice trending setup here in Apple. All right, let's go back and we'll take a look at, go back to Hero here. I'm going to zoom all the way out. So you can see that traders continue to buy calls, and that is definitely driving price action in Apple today. And note the notional value. is about 64, positive 64 for calls, and minus 43 for puts. So they're buying calls and buying puts, but they're buying more calls. The calls are having the strongest effect on price. Let's go back and take a look at the total signal. And here it's a little bit more difficult to read, but when you separate out puts and calls, it's pretty clear that call buyers are driving the price higher today. So Apple, much simpler setup than ES, no rollover to deal with, no regional bank issues, just Apple, and much simpler, easier setup today, and we'll see that in many stocks. Okay, let's take a look at, so Lou says auto volume is still 1/10 of what it should be. Let me show you this. I've done everything that I can do. This may be really strange to look at. This is what I'm using to stream to YouTube. This right here is my mic, and it's set to max volume. That's all I can do. I'm sorry. Please again, there's nothing else that I can do. Join us in Discord, and maybe it'll be better. All right, so let's move on. Let's take a look at AMD. And very strong correlation between hedging flow and price action in AMD. Let's take a look at Bookmap. And I thought the first reasonable entry here, given all the pink dots, market sell orders going down and moving up, and then order flow shifts more positive here with this reversal higher at VWAP. Price target at the 83 hedge wall. Okay, Lou, I'm sorry, I can't respond any more to that. I'm doing everything that I can. Okay, so nice setups in Apple and Amazon, or Apple and AMD, and let's take a look at Amazon now. Another nice strong uptrend. So one thing to keep in mind here is the S&P 500 is a combination of 500 stocks, multiple sectors. So there's a battle going on between the financials and tech. And tech has been very strong today, and financials weak. I think energy has been weak too. So all these tech stocks have been good longs today. Okay, so there's Amazon, nice strong uptrend, and let's take a look at Hero for Amazon. Strong correlation, especially up until about noon or so. Let's zoom in on this. So another nice setup. Go back to Bookmap, confirmed by Hero and options trades. And targets at liquidity levels here at 93. and then the 94 hedge wall, and then the 95 key gamma strike. Okay, next is meta. Order flow not quite as easy a read, except for the reversal higher at the, this is the 175, and this is actually the $175 is certainly a key gamma level. The put wall, key gamma strike, and hedge wall. So a very important level for meta, and a reversal higher at that level. Then a little pullback at 176, and then price is heading up. And interesting that we some of these tech stocks are already heading up towards their upper edge of the expected move for the week, and this is something that I get from the options market. And this is again for the week, the upper edge of the expected move. And let's just see, see if I notice that on any other stocks that so far. So AMD bounced off the lower edge of the expected move. So there's Apple already at the upper edge of the expected move. Meta. All right, let's go take a look at Hero. Another strong confirmation, strong correlation between options trades, hedging flow, and price action. Okay, Weeze asked if you have a question about Bookmap, especially an issue with your Bookmap, please contact support@bookmap.com. That is something that I can't help you with in my webinar here. Okay, so there's Meta, another good strong tech stock today, confirmed by options traders. Let's just see what they're doing. So they're selling puts and buying calls, and it looks like they've started selling their calls. Just after 1 o'clock, and then started selling puts. All right, so that's Meta. Let's take a look at Microsoft. And these large vertical lines here, these are big block trades that kind of obscure the signal. But let's zoom in and see if we can look. We'll look at Hero before that signal, and we can see the strong correlation in the first 30 minutes or so. Let's go take a look at Bookmap. Go look at Microsoft. Another strong tech stock. Already at the upper edge of the expected move. Nice strong uptrend. And targets at the 250 key gamma strike, 251 liquidity, 252 hedge wall. And it looks like Microsoft may be heading up to the 260 liquidity. And these high liquidity levels make great targets for stocks. Price seeks liquidity, and these orders, these are limit orders, passive sell orders, in the order book for stocks typically come in at the RTH open and stay there until they're filled. All right, there's Microsoft. Let's go back and take a look at Hero again. And what we're going to do now is zoom so that the action of that large block trades don't obscure the action so much, and you can see the strong correlation continuing. Let's take a look at NVIDIA. And this is pretty typical of NVIDIA, kind of morning chop, and then this stronger correlation begins around 10 a.m. And notice how price rises and then stalls as Hero flattens out. All right, let's go take a look at Bookmap. So here's NVIDIA. The quick jump up like a lot of other stocks. And then this chop. Again, pretty typical price action. Multiple test of VWAP, that's the light blue line, and then price finally moves higher. Let's see if we can get any clues from CVD, cumulative volume delta. And yeah, we can see that this cumulative volume delta starts to rise around 1230 and is continuing to rise. And you can see the green dots starting to come in here. So before, the green dots are just up at the highs here, but now they're coming in lower down. So aggressive buyers are coming in at VWAP here around 10:45 to 11 o'clock, and that starts to move price higher out of this consolidation. So NVIDIA can be a great stock to trade. You just have to be pretty patient. Okay, so Ollie asked the dash yellow line and Bookmap. All right, so what these lines are. So let's separate two things. So this is what I'm going to show is just, I've turned off the heat map. So these yellow, white, and red lines are something that I'm drawing on my Bookmap chart with an add-on. I use the price lines add-on. This is something that I use just for convenience. I like to see something that stands out that marks the round number levels. So those are the yellow lines. All this is a round number level, 227, 226. Then the white numbers are the key Spotgamma levels: the hedge wall, the key gamma strike, the call wall, the put wall. So there's Spotgamma levels, and then a big round, a 0 or a 5 number that is not a key gamma strike, I mark with red. So if this 230 was not the key gamma strike, it would be red. And that's just me. That is my, the colors that I choose to use. This is, again, just an add-on that I like to see these lines just for convenience. And I do this again with an add-on, and these are my cloud note levels for stocks. And that is the color coding that I use. And again, this is an add-on that I purchased in the Bookmap marketplace. And these levels change from day to day, the Spotgamma levels, and I just changed them in a spreadsheet, and they're updated. So those are my levels. I'm going to leave those on, and now I'm going to turn on the heat map. And this is a Bookmap feature. It comes with Bookmap, and it's showing the history of the orders in the order book. So above, these are sell orders. These are limit sell orders in the order book. And for example, let's just zoom in here. You can see at 233 right now, there are a little over 11,000 orders, sell orders at that level. And this is showing the history of those orders at that level. And it looks like it's held pretty constant, that this color remains the same. And the intensity of the color indicates the size of the orders. So let's zoom out just a bit. I'm going to go up here to 235, and as you expect, at a 0 or a 5 number, there are more orders. And note the intensity of the color there is darker red than the 233 level, indicating there are more limit orders at that level. And RHR asks, doesn't Spotgamma place the levels on the Bookmap chart for you? And they do for futures, for ES, NQ, RTY. But for stocks, they do not do that. So I do that manually. I want to see that, and I do that manually. And the way I do it again is with this price lines add-on. And I've configured this, and then I've just got a spreadsheet that I update every day. So it takes a few minutes, but that's part of my morning preparation is to set up these correct levels on the charts, and these levels come from the Spotgamma Equity Hub, and we were just looking at NVIDIA. So here, are the key daily levels for NVIDIA, shown here, and you can also go here to this history and see the levels for the last 10 days. So I can compare the levels from the previous day to this day, so I can see that the hedge wall dropped from 235 to 225, and the put wall dropped from 230 to 220. and then I just I update my spreadsheet with the new levels, and again it just takes maybe 30 to 60 seconds per stock, maybe a minute per stock depending on the number of changes. All right, so that's hope that it explains that. And okay, just some comments in Discord. All right, let's go back, and we're on NVIDIA. Zoom out. Notice how as options trades, Hero starts to shift up, price starts to move up again. So let's go back. And again, we're still looking at very bullish order flow. And on days like today, we've seen quite a bit of drops down to VWAP. I guess that's where larger traders like to get in. All right, so let's go to QQQ now. And another strong uptrend makes sense. All these tech stocks rising. Let's go take a look at Hero. And for QQQ, there was a strong correlation in the morning, and then it looks like it has leveled off somewhat. Let's take a closer look at this. I'm going to zoom out so that big morning jump was not dominating here. And still no clarity. So strong AM correlation with this big jump in Hero. Let's just take a look at one other thing, and we can change the rolling window, the look back period. Let's change it to 30 minutes and see if that gives us any more clarity, and then we'll zoom in a little bit. And not really. So far the individual tech stocks have been a lot easier to read. All right, let's take a look at Snowflake. And I'm about out of time. This is on my other computer. Just a note, I have added Snowflake to my watch list here, and I have removed Google. Google does not move enough. And Snowflake, there's often a very strong correlation between hedging flow and price action, and good readable order flow and Bookmap. So tomorrow I'm going to have Snowflake on my main computer, and I will remove Google. So traders are buying calls, and that is primarily what is driving price action. The put line, the blue line, is fairly flat, and the rising orange line indicates that traders are buying calls. And that looks like that set up a good long this morning. Traders coming in and buying calls. All right, then I'm going to wrap it up with Tesla. In Tesla, the options trades and hedging activity has been a little bit unusual today. Normally there's a much stronger correlation between hedging flow and price action, but still enough here to for a setup in the morning, long setup. So let's go take a look at Bookmap. Here's Tesla. And one thing I really like about Tesla is the order flow. I think is very easy to read. Notice here the shift from pink dots. I'm looking at this. Let me just zoom in on this. First thing in the morning. We'll look at like 9 o'clock to 12 to noon. And you can see the clear shift in order flow. Pink dots, market sell orders, a couple of buy sweeps coming in. That's shown by the small green dots. And then the final sweep down to the 164 liquidity level, and then aggressive buyers coming in right around 940, 945, taking price up to the 170 put wall, and then finally a test of VWAP, and price starts to move higher again. And notice the CVD is rising the entire time. So very bullish order flow here in Tesla today. And multiple good long setups with pullbacks. Here the first one to VWAP. Then another deep pullback to the 171, 172 level. Let's just take a final look at Hero and see what it looks like now. And yeah, no, the correlation has definitely picked up again. And no help there separating out puts and calls. The total line gives a much cleaner signal. Okay, so that's it. With the rollover this week, I'm probably going to be focusing more on stock. We'll just see how it goes. And again, remember, CPI report coming out tomorrow should be interesting with all this negative gamma, and PPI on Wednesday, and then the options rollover on Friday. So an interesting week, and thanks for watching. Thanks for your questions and comments, and I will see you tomorrow. Bye.